There's some real daredevils out there, some y'all, okay? You see what's going on. There's all this hand waving and chaos and tariffs and maybe not tariffs, and the shelves are going to empty out. So, what questions am I getting? I'm getting, hey, what alternative assets can I invest in right now? You're killing me. You're killing me. How about you get the basics right first? I'll go into alternatives, but I need to say that from the outset. How about we get stocks, bonds, cash correct first, and then stick our toe in the bucket of alternatives? But you know what? Since you asked, let's go there. Let's go there. Alternative assets right now. What am I going to say? Let's talk precious metals. Let's start with gold and silver, but particularly gold. So what's happening is gold has crushed record highs this year, 2025, flirting with $3,500 an ounce. And this is, of course, amid tariff anxiety and the risks of inflation and the will we, won't we, Fed cut thing, blah, 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 blah. So people are pouring money into gold. So when do people want to invest in gold? When everybody else is. So yeah, it's very expensive now. It's not the worst idea because it's a chaos hedge. It holds value when stocks get wobbly or politics get weird, right? But just as soon as that can happen, it can change again. You can get easier access these days, though, through ETFs in a brokerage account. You don't need a vault anymore, which is super cool. But keep in mind, look, you're buying at record highs. It's got limited upside at this point, in my opinion. Plenty of pullback risk. I mean, it slid like 1% the minute there was a discussion of a US-China thaw in relations. So that's the thing. You got to watch it. There's no yield on it. It's not like you're going to generate income off of it. So the opportunity cost is now you've locked up your money in precious metals, and that's it. So you know how to think about it. You treat it like statement jewelry, right? You treat gold like you'd wear gold. It's a gorgeous accent. It's not the whole outfit. Think 3 to 5% of your investable net worth, like max, max. Don't go crazy. Let's talk about crypto. So basically, what's happened recently is that the SEC just gave more legitimacy to crypto because they just approved options on spot Ethereum ETFs. And that's like the final mainstreaming stamp of approval, right? So, what do we think of this? It's not a terrible idea. It's been legitimized to some degree, and liquidity means you can buy with a ticker symbol and you don't have to get a wallet, which is a total pain in the butt. It's got a low correlation to the S&P over a multi-year horizon. Okay, that's the key, multi-year horizon. But keep in mind, it's still a roller coaster. That thing can move 30% in a month in either direction. Short-term gains on ETF options also get taxed at your highest bracket. There's no like long-term cap gains or anything like that. So for my high earners, crypto is, let's call it an experimental swatch, color swatch. You know, it's fun, okay, but you get a little slice, right? Maybe 1% to 3% of your play money, right? So a bad quarter doesn't blow you up. This is always my fear with that. Okay, residential real estate is number 3 on my list. So second home or rental. It depends on the market. It's really tough, right? National price growth has slowed. That doesn't mean it's not growing, but it has slowed down year over year. It's now about 2% on average. The 40 plus metros are starting to slow too, which, oh God, thank God, because it's just been crazy, the inflation in housing. And so real estate could be a good idea. You got to really run the numbers on this though, because it could be an inflation hedge with leverage, like a 5 to 10% gain on a 20% down payment. That can juice returns, right? So, lifestyle and income wise, you could have some benefits there. If you're getting my ambiguity on this and my hesitation, it's there because between the interest rates right now and the expensive nature of real estate and the illiquidity of real estate, is it the right time? I think it's really market dependent. And it's also how much cash flow you have and how much money you have that isn't in the markets and isn't needed for reserves or other big things. So it's a tricky one. It could be good, but this obviously is very long term. If you're not in this for at least 5 to 7 years minimum, I don't even know why we're talking about this. So that's my take on real estate. So look, the bottom line is in this kind of weird limbo phase. You got high gold, you've got volatile crypto, you've got housing. You got to think of these things as seasonings, as flavor enhancers, as I like to call them, not the entree. I can't stress this enough. I've given you my thoughts on alternatives, but the overarching thought is don't go crazy. Get the basics right first. And if you're not sure how to integrate that into your greater strategy as a hedge or as a flavor enhancer, as I've called it, you know what to do. Talk to your financial advisor, give me a call, run those numbers before you make any big commitments. Hi, I'm Jennifer Kirby from Talisman Wealth Advisors, here to give you advice and guidance on money and financial planning. So, if you're interested in what I have to say, please subscribe, like, share, and comment. Thanks.